Let's look at ServiceNow stock, which is in my pension. I obviously don't want a pension which is going to be mediocre, and certainly not going to use an IFA or a fund manager when I can find great companies myself. Now, this is a classic example of why you need to do a little bit of monitoring, but you shouldn't over monitor a portfolio. And I'm going to use this as a case study. So if we look at ServiceNow, which is listed on the NASDAQ, and it's in my SIP and my ISA. And it's a company which, and I'm going to explain what I'm showing on screen because it'll be too small for you to see, which from 2019 up to its peak in 2021 managed a whopping 205% return. However, and this is why monitoring companies and having a kind of trailing stop is important, it subsequently then dropped some 46% from peak to trough, okay? And you can see that over there. And that was the drop, and I'll move some of this stuff out of the way, okay, just to clarify stuff that we don't need in the way. So it moved down 45%. Now, you don't want to be holding it all the way down and having it go back to July 2020 levels when you were up 200% and then seeing yourself lose basically half that amount, albeit that it then went back up. Now, conventionally, the wisdom is, yeah, but Alpesh, after that, in the subsequent 10 months, it went up another 65%. And you don't want to be trading your investments. You're absolutely correct. So where do you find the right balance between trying to grab and time, which is difficult, and we're talking about investing, so we don't want to try and time the market, and find the balance between that and getting those big gains, but not getting the big drawdowns and losses in a company which, you know, Piper Sandler, Wells Fargo, Morgan Stanley, you can see over here in the corner, all rate as a buy. So does Citigroup, JP Morgan, HSBC, you know, all of them rate it as a buy. So how do you avoid doing that problem? Well, what I tell my students who are on my Great Investments program is this. When it drops a certain percentage from the high it's been, and you only need to monitor something, say, weekly or every fortnight, if it drops, say, 10%, 15%, 20%, or 25% from the high, you sell a certain proportion. Now, the reason for that is this. Let's say it drops 25% from its peak, okay, which is all the way down here, right? You might sell 100% if you're risk averse. If you're risk loving, you might only sell 50%. And then if it drops a further 10%, you might sell more. The reason for having percentage drop and percentage sale is this. One, you're not trying to forecast what's going to happen in the future. You're not trying to say, oh, I can see into the future. The future is foretold. I have a time machine and therefore I should hold on to it. We'll only know that in hindsight. So all you can control is not the market, but you can control, based on your risk appetite, what you're going to do by way of strategy. And your strategy only needs to be, I'll focus on the market, I'll look at my investments, say once a week, once a fortnight, and just check if any have dropped, by what percentage, and how much I'll sell if that happens. And you have that predetermined. Don't think about it in the moment and then get all flustered reading the news and then second guessing your strategy. Never second guess a strategy in the middle of a war, as American generals will tell you. So instead what you do is do it the way I've said, and that way you pocketed your gains, but you avoided those big drawdowns. Now, what about getting back in though? Oh, so we got out there. Well, that's just the same assessment you'd have to make, whether it's there or here, on how you and why you got in, how and why you got in. Now, in my case, the reason we get in is we look at valuation, revenue growth, dividend deals, and so on. And that's why in January of this year, ServiceNow came up. Anyway, I'll talk about other stocks as we go forward, but that simple process, which isn't time consuming, should capture the gains without the losses. Okay, follow and like for more, and there's more on alpeshpatel.com/links as well.